November the 1st, Vincenzo's Go Crypto Investing. And the key questions that are here is the Bitcoin going to rally to all-time highs on the interest rate cuts from the Federal Reserve? Or are the long-term rates going to rise due to the national debt problem and risk assets like Bitcoin, crypto, XRP crash when everybody thinks that the price is going to pump? The key numbers are in. The signals need to be reevaluated, and we're going to get into everything you need to know today in today's episode. Hit that bell notification and comment down below. Like the channel and share as we get into the Bitcoin price. You can see after the rate hikes, or the rate cuts, excuse me, that we just had last week, 2 weeks ago, or I think it was last week, the Bitcoin price, it was last week, had a big down day followed by a consolidation. And within this consolidation now, we're well below the 100-day moving average and the 50-day moving average, which is bearish. We're sitting just above, and we wicked and held the 200-day rate here. But we've been theorizing that in the short to medium term in the Bitcoin price, that we would not be able to hold if we came back down and retest due to all the previous buyers that were stacked here being bought up and being used. So on the retest, you would fall through. And that's what we're watching now. You got a parallel running 50, a parallel running 100, and a parallel running tightening and constricting like a boa constrictor, 3 daily time frame moving averages. And I think this has got more of a chance to break to the downside out of this, because this is going to break, and it's going to break big. Anytime you get a long consolidation and everything starts to run parallel together, you're either going to have a pump from the 109,000 straight up to a new all-time high or near at this upper resistance of the rising channel at 126,000 and change, depending on the day you hit it, because it's uptrending. Or you're going to have a big break to the downside on the breakout, right? Because the breakout can be up or it can be down. It just means break out of this pattern, right? And I think if you break down out of here, you're going to 95,772.97, an area we've been watching out for as we zoom out for quite some time, because then that brings into 79,450. And you say, Vincenzo, key levels. Key level is in red there at the 95,000 horizontal left to right. Why, you may ask? How come that is? Well, that just so happens to be the 50-day moving average in the weekly time frame, as these are the daily time frame moving averages up here. As important as those are as important as the weekly and the monthly time frame moving averages, right? And we have not hit one, the weekly time frame moving average, since coming back through the May, the springtime correction after what was then the all-time high, right? So that is critical there, and that is also a critical reason that the 79,450 and 19 cents is critical, because that's the 100-day moving average in the weekly time frame. Then you say, oh, Vincenzo, where's the 200-day at? There's the 200-day in the daily up there at 108,000. Where's the weekly time frame? Well, there it is. It's sitting at 61,018 cents, right? And that would be catastrophic if the Bitcoin price came down there for a lot of these quasi-Bitcoin treasuries that used to be real companies and now have leveraged, borrowed, and mortgaged their future to become a Bitcoin holding company. And if the Bitcoin price goes down, they're screwed. If the Bitcoin price goes up, they're fine, because they can borrow more money against their company, right? But that infects what that company is. If they used to be a car company, but they leverage and mortgage their company by borrowing money to buy Bitcoin, yeah, they might still sell cars, but if Bitcoin crashes and they get margin called and go under, they no longer can make cars anymore. That affects not only the people that invested in crypto, but affects those people that worked for that automotive company. I'm just using this as an example, that worked for the automotive company and now do not work for the automotive company because they went bankrupt, in a hypothetical, because the Bitcoin price went down and they mortgaged and borrowed the future of their company and hoping Bitcoin would consistently and only go up, right? So that's very important to understand. And that's why this 79,000 and the 200-day down there at 60 would be critical, because even a company that had the first mover advantage, that came up with this idea, this new thing, this crazy gamble with taking your companies in the Bitcoin treasuries, was MicroStrategies. And he did it starting around 18 to 20,000, but he's bought all the way up, only buys highs, because that's when he can reevaluate his stock and his company when he's up, to borrow more money and maximize that. So he always has to buy the tops And then anytime there's a correction, he buys, but he buys a fraction of what he buys on the highs. And thus, the reason we're talking about this is it brings his average price, which started around 20 grand, which is now north of 70. I believe it's about 74 to $76,000, somewhere in there, in the low, approaching the middle 70s for his average price. That's why we're talking about that. The Ethereum price, you can see, is the same thing. We're threatening to have in a few days a bearish cross, and where what a bearish cross is where the 50 gets underneath the medium-term moving average, or the 100-day. You can see that at 39.64. The 200-day is slightly running, but if you extrapolate the data and predict this into the future, if nothing's crazy like a big pump happens, and you consistently trade the way you've been, which is up and down, but overall down, you could extrapolate this in 3 to 7 days, where you could have a bearish cross where the 50 is going to cross the slower reflecting moving average, because it's a longer duration, and cross that, right? And that is a critical area, because in the Ethereum price, if you do not get above and break back above these short-term moving averages and the pattern resistance, which is the megaphone neckline resistance when you're below it, which is support when you broke above it to breach a new all-time high. Watch any videos the last 3 to 6 months and you'll see the megaphone neckline support and resistance and pattern, and why there's a $10,000 technical target does not mean critically here. And this is the most important information that I can give you simply and easily. Just because there's a pattern, just because there's a target, just because there's a breakout, doesn't mean it has to go there because you drew it up or I drew it up or technically it says it should. That doesn't, there's things that trump that: market forces, flies in the ointment, war, right? A financial crisis, bankruptcies, right? Other things that happen that can invalidate a pattern and supersede it. Just because the pattern says it could go there doesn't mean it will go there, right? These are just patterns and probabilities. It might be a 7 out of 10 that it should go there, but that leaves a 2.5 out of 10 that it won't go there and goes the opposite way, right? It's all probabilities. That's all. And this is simple, easy advice I can give you here to become an asset millionaire. And it's all about education. The more education, the better off you'll be to make financial decisions. Is technicals is just the probabilities. It's like going to Vegas, sitting at the blackjack table and playing blackjack. If you can count cards and you know how many decks are in there and you can count them in your head, you can give yourself an advantage and heighten your edge and percentage to win. Doesn't mean you're always going to come out ahead, but it gives your odds a better chance of succeeding, right? And takes the odds from the casino and lowers them and puts your odds slightly higher above the casino, hence giving you, if you play it right, you walk away with the money, versus the casino having the odds and they walk away with the money if you stay in too long, right? And that's all technicals are, is it gives you a probability and it gives you a better chance of making a successful trade based on percentages, right? That's all it is. But in percentages, every time something new happens, which is every minute, every day, every hour, every week, every month, every second, the percentages get readjusted based on new information, right? So it's a continuous thing. But why I digress here, if you break down, since you're below these falling short-term daily time frame moving averages, if you can't get above those areas, the megaphone neckline resistance and the 50 and 100, you're going to come back down to the 36.05, which is the 200-day moving average. And I don't think, just like Bitcoin, you'll be able to hold it. And I think you're going to come to 34.66, which is the top part of this green support and resistance trading box. And I believe if you come down here and hit this after some trading, I think eventually you would come all the way down to the 3,068.82, because everybody is so bullish. Everybody thinks these have to go up. Everybody is going off of what's been happening in the trend and patterns since 2020 COVID. So it started in the fall of 2020, which started a fall and holiday season rally in all 4 years leading up to this year. But October was down. November is starting. We're about to find out today, as it's the first day of November, and people, because of all three of those things, are thinking the price has to go up. I think there's a sneaky bear market about to get underway, but that's just my own personal opinion right now. But if you want to get bullish, you got to break above these three moving averages and then get on top of this negaphone neckline resistance and turn it to support. Then you can get short-term bullish. Then you can try to reattack the 49.60. Then you can try to come up to this $10,000 high sometime next year or the year after, right? If we go and look at the XRP price, then we'll look at the Ethereum price because everybody loves Ethereum or XLM. After we look at the XRP price, you can see we're still sitting where we've been and talked about yesterday. We were getting rejected by these overhead moving averages, the same as it's been ever since the top almost a year ago now, if you can believe that, because 1 year ago, this week is when the euphoric rally started with the Donald Trump winning the presidential election. I believe it was November 4th. And then it started the rally for 3.5 months. And it's already about a year now that we've been essentially deflating, and all the altcoins are much lower than they were. And all the major cap coins, besides Bitcoin and Ethereum, are lower than they were. And you can see the XRP is sitting below the 3 moving averages and the critical short-term $2.55 that you need to get above to try to reattack and break the daily time frame moving averages, just as I hit the no on that. Because if you don't break those 3 moving averages, you're going to continue to be rejected as you've been ever since you've been trading down into them since August, right? And if you can't get back above this 255, you're going down to the weekly time frame moving average at $2.33. And if you can't hold that and make a substantial rally, these daily time frame moving averages would be trending closer towards that and would eventually force you all the way down to the 100-day moving average in the weekly time frame at $1.77, right? And that's what we're looking at here in the short term with the XRP. Obviously, to get bullish, you have to get back above the 255 and take out these moving averages in the daily time frame and come up to the 307 major resistance level that's been there ever since, if we zoom this out, what appears to be maybe a mountain double top forming. And you can see the pattern and the tracks all had the big correction in the middle that we were forecasting. Almost came down to a technical target that we had here when we hit $1.61, right? But we had a $1.28 target before we would make a new high. But then we made a new high. And you can see the track did have a couple of them that showed the brief new high, then a consolidation, but then what forms like a double top, because over the next several months, you can see the track leads you back down to the $1.76 and then a breakdown, and eventually coming down to the $1.33 in trading, and some of them even dipping down to around $1 or slightly less. Not just on the wick. You can see the wick showed you that here, but I'm not just talking about a wick, right, coming down there. I'm talking about full candle bodies. And you can see if you look at the XRP since the last 2 years, every time you've had a wick and bounce back, it's come down, right? Wick, I think you're coming back down here. I think you're having a sneaky bear market, and then you're going to have a euphoric, massive rally in 2026 through 2027 to blow off top before everything comes unglued. At least in my own personal opinion, I believe big financial sovereign debt crises is going to happen. But I think there's a lot of sneaky things going on here, and a lot of people are going to get caught off guard if they're not prepared. Unfortunately, that means the DGB is one of the bigger pumpers today, but that's just because it's got so low. DGB might be threatening, even though I think next year is going to be the big year for DGB and the AMP as we go through 2026 into 2027, right? But you can see we're still very bearish. We're on near all-time lows. And you can see we actually did wick 2 price discovery at an all-time low. You need to stay above this 0.00564, or you have a threat to come all the way back down to that wick bottom. You can see the AMP. I have not forgot about you. I still have my AMP. You can see we've now confirmed 2 rejections on that upper resistance, which is very, very bearish. And I'm in content, and I believe this has got a long way to go down in the next month or two, unless something crazy changes, because you've got a double rejection on what used to be major support at 0.00313. Danger, that's the area code for Detroit. And that usually confirms a breakdown. And if that is confirming a breakdown, you must probably come down here before you have any kind of sustained rally being built. Or this is a shyster coin, and even though I bought when it was 99% down, they might shice me out of all my money the next few years. I hope not. I don't think so. I think at some point in brief history in the future, I will be able to get out with a very, very good profit, because my average price is sitting just above this major support level up there at 0.00393.4, somewhere right there, somewhere up here, right? So that's something that we have to watch, and something that's going to be very interesting. I have a slight cold today, so I'm going to keep this video shorter than I would usually. Like the channel, subscribe. Peace and love to my beautiful, glowing future asset millionaires via gold and silver bullion, 401k, steady investing, real estate, cash on the side, earning 3 to 5%, staying out of debt, most importantly, living below your means. And as you increase your income, you do not have a lifestyle creep and you continue with a subdued standard of living so you can invest that new money that you make until you reap those rewards and have that gratification, just not instant, but you have it a little farther out into the future and sacrifice slightly now, not living poor. You still live in a nice house. You still have your clothes, right? But you live below your means on whatever you make. No credit card debt, no car payments, pay off your mortgage, right? You don't have to buy the watches and the jewelry and the handbags to become an asset millionaire. The millionaires are all around you because a millionaire is not what you used to think it was 30 years ago. A millionaire now is essentially a upper middle class, and those people are all around. But those people drive normal cars, normal trucks. They don't have fancy clothes or handbags or watches or jewelry or things like that to have flash. They don't have that. They have a car they've had for 9 years, a truck they've had for 10 years, right? Normal $60 shoes, not $300 shoes. Normal $50, $80 shirts, not $400 shirts, right? Those are the simple things in the way. If you see and look at somebody flashy shirt, flashy jewelry, flashy shoes, flashy car, everything on credit, everything new, right? They're not rich. They're just looking like they are. The person that drives a 10-year-old truck that has normal clothes, that doesn't try to flash out with jewelry or $300 sneakers, tennis shoes, as you might call them today, or $400 shirts, designer dress shirts, and $300 designer pants, right? Those people are the ones that are the asset millionaires and continuing to grow, right? The ones that you would never think by looking at them. The ones that are flashy are trying to show and perceive wealth. The ones that drive older things and aren't flashy are usually the ones that actually have some money. Peace and love. The Rock's Eyebrow, Jay.